The Fed raised interest rates 50 basis points this week. And I had been saying that I thought that would be a mistake. The markets are corroborating that it seems that the Fed is making a mistake. So we've seen the stock market go through a spasm. The S&P now, from its peak, is down 15%. The NASDAQ from its peak is down 25%. Pure play innovation strategies like ours are down 60 to 75%. So that's not just a spasm, that's a convulsion. And you'd think that innovation companies that are not in benchmarks are witnessing the end of their world. It couldn't be further from the truth. This is a huge inefficiency in the market, this tendency to move towards benchmarks in risk-off environments. It's ridiculous that the genomic revolution and blockchain technology and crypto assets are all behaving exactly alike. In fact, crypto assets began to correlate highly with the NASDAQ starting at the beginning of COVID. Before that, there was no correlation at all. And so we think this is an anomaly, a massive anomaly, and that with time it will correct and the efficiencies will be introduced back into the market.
Hello and welcome to Money Talks. In today's video, CEO and CIO of ARK Invest, Cathie Wood, updates about inflation, rising interest rates, chances of an upcoming recession, and economic indicators. Cathie Wood also speaks about the crashes and overall performance of cryptocurrencies, stock market, and bond market. She also reveals what will be Fed's next move regarding inflationary pressures in the market. Make sure to stick around to the end of this video where Cathie explains why she thinks we are in a bear market. So without wasting any time, let's dive right into the video.
And that is why this past Wednesday, the fear that the Fed would raise interest rates 75 basis points, either this go around or next go around, Chairman Powell put to rest and said they were not contemplating it. And so he was considered, he sent, relative to expectations, a positive signal. And all the markets seemed to enjoy a run for that one day based on the notion that the Fed was beginning to understand that maybe they're overdoing it. We think over the next month, now they have another meeting in June, over the next month, we believe that the Fed is going to get a lot of data. Today was one of those days with the employment report that is going to put another measure of caution into their cadence here. So we would be surprised to see another 50 basis point move. Maybe they do 25. We still think they're overdoing it and the markets won't be happy. But I think what's happening here is this Fed and the members of the Fed are so afraid that they will be stuck with the legacy of reigniting inflation and not being able to put the genie back in the bottle. They're so afraid of that they are they're speaking very fiercely right now, and they've made a bold move, 50 basis points, when the base is only 25 basis points. So we shall see. We've seen M2's growth decelerate from 27% to 9.9%. And if you look at it that's on a year-over-year basis. If you look at it on a 3-month moving average basis and annualize that, we're in the low single digits. And it's kind of consistent with what happened in the GDP report. I'll get into that in a moment, but that GDP report was negative.
Just recently, 3 funds of Cathie Wood's ARK Investment Management bought a combined total of 546,579 shares of Coinbase Global. ARK Invest founder also says that the increasing correlation between crypto and traditional assets indicates that the bear market will soon be over. In a new video update, Wood says that the bottom for risk-on assets like Bitcoin and cryptocurrencies is likely near.
Things are not going well generally for the economy, gas prices, Russia foreign policy, Russian-Ukraine war, and so forth. So I don't think that anyone who's going to be a part of the midterm elections will want to participate in controversies around any of those. Last month on YouTube, I gave 2 points of view. Same. Everyone's looking at the same numbers, but there were 2 points of view that were very different from one another. One was the economy's charging ahead, inflation's going to continue, rates will continue to go up, we don't think there'll be a recession, and so forth. And then the other one is, whoa, watch out, inventories are building, consumption is slowing down, consumer sentiment is falling apart. We risk a recession here. And oh, by the way, China and Europe are in recession. Well, I think that the first camp is capitulating to the second camp. It's still fighting this notion that GDP actually fell. This in real terms now. Take away inflation, GDP unit growth fell quarter to quarter at an annual rate by 1.4%. The consumption of goods slipped slightly. That's what we're expecting. Meanwhile, inventories are piling up. Government spending went down, as I mentioned. Imports surged. And so a lot of those economists and strategists in the first camp were saying, oh, that's exogenous. That's an anomaly. You've got to adjust for that. No, you don't. Imports surged and went straight into inventories. They canceled each other out. So you don't. So what's so fascinating about the world of economic experts today, some were trained in economics, to be sure. Many were not. They were trained. They learned after they got their MBAs. And maybe they didn't go into the depth that many of us had to back in the day when everybody came into this business with an economics degree. So there's a lot of superficial analysis out there, and a lot of cherry picking also in terms of indicators. So we do think that a recession is quite possible here in the United States.
Her prediction comes as the price of leading crypto asset Bitcoin moves down in tandem with the stock market, which Wood says is a temporary phenomenon. Cathie said that crypto, a new asset class, should not look like the Nasdaq, but it does. It's highly correlated right now. You know you're in a bear market and maybe close to the end when everything starts acting alike. And we're seeing the capitulation of one market after the other. Despite the current downturn, Wood says she remains long-term confident in crypto because, like the rest of ARK's investment picks, she sees it as something that will exponentially grow as it disrupts markets and societies. Cathie further said that given the dreariness in the equity markets and the bond markets today, and now increasingly commodities markets and crypto, take a look at our research, read our Twitter profiles for some hope and optimism, because I can't tell you how excited and confident we are that our platforms are going to transform the world and are entering exponential growth trajectories now. This is not about 5 years from now. We are living the reality that was only a dream in the tech and telecom bubble. According to Wood, blockchain is among a group of sectors that offer opportunities for exponential growth. She sees these sectors collectively exploding 21 times over the next 7 to 8 years.
So we've gone through what's happened to the various averages, broad-based averages out there. If you look at the S&P 500 year to date, energy is the only sector that's up. It's up 47%. So if you didn't own energy, and we don't, we think over the next 5 years, the energy unwind is going to be pretty severe. But it's up 47%. So utilities were essentially flat, down a little bit, staples as well, down just a little bit. On the other side, you have communication services. So, some of the beloved stocks in the broad-based benchmarks. So Facebook, Netflix, Amazon, The comm services down 25%, although I think Amazon's in consumer discretionary, which is down 24%, and technology broadly is down 20%. As I mentioned, we do not own the technology stocks in the S&P 500. Would we have done better if we did? Yes. But we don't think they are the leaders of the future. And we're all about how the world is going to change. And we're looking for those exponential growth trajectories that will happen along the way. I mentioned in terms of bonds, I'll just reiterate that if you look at credit default swaps, the Fed's getting a message like it did in 2018. Watch out, watch out. Commodity prices, they look like they're in a topping formation. And one of the reasons they are is the dollar has been on a run. It's up over 15% since its low last year. That is a huge move, and it's not just against emerging market currencies. They're doing worse. It's against the euro and the pound and the yen especially. I've been shocked at the yen. It's gone from 105 to the dollar to about 130 to the dollar in the span of a year. That's huge. And it's making our goods more expensive to the rest of the world. So our export growth is probably going to slow down, not only because many countries are in recession, but also because our prices have gone up so much to them, given their currency declines. As I mentioned, crypto, new asset class, should not look like the NASDAQ, but it does. It's highly correlated right now. You know you're in a bear market and maybe close to the end when everything starts acting alike. And we're seeing the capitulation of one market after the other. I think the Fed's going to get the message.
So do you think a global recession is imminent or not? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.